Ladies and gentlemen, welcome back to my channel. And here today we have stocks for September. I will recommend you stocks which are best for September. We have Interglobe Aviation also, but I will tell you what's the problem with it. We have this stock also, but here if you look at it very closely, NM is given. NM means not meaningful. Not meaningful. ROE is also not meaningful. So I'll take you to page number 13. Here it is given NM. NM means not meaningful and therefore should be excluded. And here also NR means not rated. And when ad rating is given, we expect the stock to deliver 5% to negative 15% returns over the next 12 months. Okay, so this is the case, but I'll calculate and show you what to do about it. So there are 6 stocks. So what you have to do is equal to 1 divided by 6. So you get this number. Let me zoom a little bit. Yes, now it is better. So click and drag and left click on your mouse and again click and drag. So now we want to calculate expected return. To calculate expected return, we have to multiply the first stock multiply by the allocation. So shift multiply by allocation. Then when we go to the next stock, we have to put that addition sign, and also we have to continue with the calculation. So Century Plyboods is this. So Century Plyboods and multiply by the allocation. So we have to continue. Upside multiply by the allocation plus upside multiply with the allocation plus upside multiply by the allocation plus upside multiply by the allocation. So you press enter, then whatever you get is 14.9 expected returns, and the risk that we are going to calculate is by standard deviation method. In standard deviation method, upside, press shift and drag down, and then you close the bracket, enter. So the risk that we are getting is 3%. And if you want to see, okay, let me solve and show you. Let me calculate and show you. If we exclude this stock, okay, we'll exclude this, we'll place it here. Okay, so now we are excluding that and we are taking only the 5 stocks. So upside multiply by allocation plus upside multiply the allocation plus upside multiply by allocation plus upside multiply by allocation plus upside multiply by allocation. So we click enter. Here we are getting 11% return, and the risk we will calculate by standard deviation for all the stocks. All means now we have only 5. Close the bracket, enter. So the risk that we are getting is 3.97. So now you will say that let's take only top 3. If we take top 3 is multiply by allocation plus upside multiplied by allocation plus upside multiplied by allocation. Click enter. So we are getting 6, and the risk that we are going to get is standard deviation the risk that we are getting is 2, and the returns that we are getting is 6. So if you buy and hold for 12 months, I guess you will at least make 19%, because then we are going to cross the fair value if we buy and hold for 12 months. And also in the ratings it is also given that when buy rating is given, you have to buy and hold for 12 months, only then you make 15% returns. And friends, I want to share to you something. Last month, in the month of August, August, I had given this outlook slideshow from the beginning. Okay, so and I had mentioned that Nifty was trading about 22.4 in FY22 and FY22 estimate, and in FY23 it was 19.5. I also had told you that you have to buy Nifty 50 index fund or Nifty 50 ETF. You didn't buy. See what has happened. In just in 1 month it has given 6% returns. It's your mistake, you did not buy. Okay, so and then the thing that I had also mentioned, that small caps and mid caps have high volatility, and in large caps only you have to go, and investors with only high tolerance should invest in mid caps or small caps. So you have to focus on stocks that have consistent sales and earning growth. This was of August. So, and if we go for the valuations of September for this month, we expect the profits of Nifty 50 to be growing 31% in FY22. This is estimate. In estimate I have got by calculating by the projections, and by 14% in FY23 estimates. So if I take this projection in FY22 estimates by sector analysis, I am getting this, I come to this conclusion that banks and financials, also metal sectors and mining sectors also will drive, or they will contribute a significant part of growth in the growth story when we say about the earnings growth. So even if the earnings are growing, the stock price will drive up, and high spending by consumers during the festive season could keep investors interested in discretionary sectors and also stocks. So what we have to do is, since the broader market valuation remains rich, valuation is very good, and investors need to follow stock specific approach with higher preference to large caps followed by mid caps. So you have to go for large caps and have to followed by mid caps. So also there is a risk of signs that are appearing of third wave. If you see the signs of third wave appearing, that then you have to short sell, and we cannot predict the third wave. In stock markets it is always said that we can prepare, we cannot predict. So it's the same way. Preparation is the same way that we do calculations, we do project estimates. We are getting the estimates by doing a specific model or doing a specific projections, like how we did of Nifty 50. And this is all what I had to say. Thanks. Thanks, and please subscribe to my channel. I'm bringing you such good content, and I am being very honest with you. And there are so many things that are happening on Instagram that everybody is trying to mislead the retail traders, and that's so harsh. Okay, we have to accept the harsh reality. Then till then, please subscribe to my channel, press the notification button, and also please follow me on Instagram. There I recommend stocks for short term. I also make reels, so please follow me. You can watch my reels and you can learn some short chart patterns or something related to technical analysis also. But I am a fundamental analyst and I am more interested in fundamentals. Oh, you make wealth in the long term. In technical analysis you get entry points, but in fundamentals there you get all the clear cut picture of the company. So thank you very much.